Hi there, welcome once again to the Dukascopy TV studio. I'm Ben Jones. Back alongside me is Jean-Francois Owczarczak, here to give us the latest market update. Jean-Francois, once again, thank you very much for joining us.
Hi Ben, thanks for having me.
Not a problem. So, the currency sell-off has continued. Can we go straight in and look at Euro-US dollar and the cable?
Sure. So we're back on the mosaic that we have for this Dukascopy show. This is an hourly chart, so you're going to get a perspective over the next few weeks. You can see we have euro-dollar here, which is slowly getting into impulsive 2 targets, which are quite aggressive downside targets. We have cable, which has reached these impulsive 2 targets. Then you would have gold, which still has maybe a week or so to go and still has some potential to the downside. Maybe quickly, dollar Swiss getting into its targets too, dollar yen also getting into its targets. S&P 3 months futures, still a bit more to go there, and on the Treasury bond futures, pretty much done. So let's go into the detail and to euro-dollar first. Now there was Jackson Holes this weekend, and so as Yellen is trying to induce us in giving us some guidance into when they're going to raise interest rates, not in the near future, but in sometime in 2015. In Europe, the talk is more how are we going to avoid deflation and kickstart the economy again. And so in that respect, there are some quantitative easing measures planned for this autumn in Europe. It doesn't seem that they're going to be that aggressive, so they're going to really change the picture. That's hard to say, but it does seem like it is going in that direction, that in some way the monetary policy in Europe has to be loosened a bit. So that has, well, is it a consequence or is it the reasoning for the weakening of the euro over the last 3 months? It's hard to say, but if we look at the charts, we can see that the daily, which has been heading down since this spring, still has some time to go and still has some price targets, objectives or potential. So if we go into the daily here, now we're counting in months, there's probably 1 or 2 more months to go at least, and we're slowly getting into the targets here, but they can lead us down to the low 130s level. Just to give a bit of a background, the targets are calculated on volatility or the width of our largest standard deviation envelope. When prices accelerate, volatility may increase and then the targets may be revised down. But at the moment, this is pretty much what we have over the next 2 months, is a target in the low 130s in, let's say for now, worst case scenario. Now we're slowly getting into a point where we see market stress here with the 2 envelopes touching each other, as well as the risk index well in the green. That may lead into some kind of an intermediate bottom and some consolidation, correction up. Now this is weekly, so it won't happen overnight. It is a daily, sorry, it won't happen overnight, but we're pretty much in a situation where we are into a temporary exhaustion. Yet again, please bear in mind that it is only temporary and we think the trend should continue a few more months and with more downside potential. Now, putting that into perspective of the weekly had been correcting up, as the message here, never made it above its corrective target, so never got into a robust long-term uptrend, and basically came pretty close to it and started to reverse down. So the corrective targets are pretty much done, and it seems like it may be rolling over, which the daily is confirming, or has been confirming over the last few months. Now the hourly has seen quite a large sell-off over the last 6 weeks, and is slowly getting into what we call impulsive 2 targets. This is the maximum level of targets that we calculate. It's 2.3 times to 2.7 times our envelope width from the highest point of the chart. And we don't calculate an I3, so once we get there, we're pretty much to a point where the move is exhausted. Now it's not quite done yet. There's probably one last move down, which may happen during this week and make it into the target zone here and into a level between the lows 131 and 131.70. So that's pretty much what we would be expecting over the next week, and then probably the start of a bounce. I've spent quite a bit of time on this. I'm going to try to be quicker on the other ones. So let's back to the mosaic and to cable. Cable still a lingering uptrend on the weekly, but we did have some stress points here, so a nice spot to have at least an intermediate top, and impulsive up targets had barely been achieved, so a certain sense of exhaustion here over the long term. The daily is correcting down, and a very crucial point here at 165.65. If we make it below that, this weekly chart would turn impulsive. These corrective targets usually show a pretty good sign of support. So it means that now that we've into these corrective targets, we may expect over the next few weeks some sort of a bounce. If we make it below 165.65, then it opens the door to much more aggressive targets, as we've seen on the euro. Now, also on the hourly, E2 targets pretty much done. Strong exaggeration on the risk index, envelopes are touching each other. It's just waiting to turn. So also here, maybe a bit of work here, but we're slowly, I think, into exhaustion in this shorter term move, which we counted weeks here on the hourly. Now let's move. If you look at dollar Swiss, pretty much the same picture in reverse. Dollar yen maybe more differentiated, still in an uptrend, still a bit more to go. We're talking 109, 110 here, so there's not that much potential, but it is still in an uptrend. And making it up to its potential on the dailies, which lead us up to 106.50 over the next month or so. Now, the hourly is also exhausted, so we could also expect here some intermediate correction. Now into gold. As we had been toning over the last few weeks, the daily was neutral, showing a bullish trend, but no targets, meaning the targets were negative. And so a neutral situation within a bearish long-term downtrend, which still had potential over the next 2 months, no, 2 quarters, excuse me, down towards the end of the year, and with targets between 950 and 1170. In this neutral situation, resume downtrend on the hourlies, and it seems that this move, although we had an intermediate bottom last week, is not finished, probably has a few more weeks to go, and some potential down to 1260, 1270, which we have already barely touched a few times already. Now if we go into the S&P, very E2 targets, very linear long-term uptrend. It's hard to call the end of it, but it seems like we do have some signs of exaggeration here. We're slowly getting into these I2 targets. There's still some time left, but we're slowly getting into areas where we could expect this move to slowly see some consolidation. Now we do have targets here up to 2,210. So we still may be able to make it over the next few months to those levels, but it's pretty much risk-reward. It's pretty much exhausted here. Now if we look at the daily, also exhausted, we're pretty much into the targets, probably some kind of a last move up here, make it above 2,000, which we've been leading to over the last few weeks. And then pretty much exhausted, we would see a continuation of this consolidation over the next few months. On the hourlies, this move is not quite over yet, maybe 1 or 2 more weeks to go, and make it above 2,000, maybe up to 2020.
Fantastic. Jean-Francois, once again, thank you very much for joining us.
Thank you for having me.
And thank you for watching. Do make sure you keep clicking back to Dukascope TV, as we'll be bringing you plenty more updates and exclusive interviews. Bye for now.